Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 13th of March 2024. The FTSE is now up for the third consecutive day. It is testing liquidity above the December high at 77.69. It has finally broken out of its consolidation pattern to the upside, breaking through this former resistance level, which is now going to be key support should we get a pullback to this level in the future. So if this level holds, I think the path of least resistance is going to remain to the upside for as long as we don't close back below this level. From here, it looks like the FTSE could be heading towards the February 2023 all-time high, which was hit over here. I know this is a long distance away from where we are at the moment, but given how long the index had spent in consolidation prior to the breakout, the move higher could last for several days and potentially weeks even. So the path of least resistance is clearly to the upside, and the FTSE is supported because of rising commodity prices. We've seen precious metals rally of late, gold hitting new record highs. Silver has also come back a little bit, but it's copper which is now moving sharply higher. Let me just pull up a chart of copper for you. Now, as you can see, copper has broken out cleanly above this bearish trend line and its consolidation pattern to the upside, rising above $4. This is good news for commodity stocks, plenty of which found in the FTSE. That's why the UK 100 index is rising today. Rising commodity prices is also good news for Chinese markets. So recently we've seen the China A50 index rally sharply, rising above the 200-day moving average and this shaded support area. So now it's coming back a little bit lower, but for as long as it remains above the shaded blue region, the path of least resistance on this index remains to the upside as well. Meanwhile, the rally continues for the other major indices, with the German DAX index here showing a fresh record high above 18,000 today, before pulling back a little bit from these extremely overbought levels. But the key point is that markets are still continuing to rise on both sides of the Atlantic. So we are in a risk-on environment, which should be good news for the likes of the Aussie dollar, possibly the Euro dollar, and all the other major FX pairs, despite the fact that we had a stronger than expected inflation report from the US on Tuesday. Looking at precious metals now, and starting with silver, you can see that it has bounced back after yesterday's CPI related drop. Crucially, it held support right where it needed to at around 24.20ish, 24, the round figure, which was previously resistance, finding support there. Previously, silver had been in consolidation before breaking out, and it's now tracking gold prices higher, but it remains miles away from where it should be relative to gold insofar as the historical levels are concerned. If you can see this monthly time frame chart, silver is miles away from its record high that was hit in 2011 at just under 50, but it could be gearing up for a potential breakout in the not too distant future. This month it's up around 8% at the moment and counting. So the motion higher will have started this month, but let's see if it will be able to break out more decisively this time, because in recent years it has failed every time it's got around the $25–26 area before going down. A move above $25 to $26 area could be significant insofar as the long-term charts are concerned. Gold is looking strong. If I show you the daily chart, yesterday it sold off on the back of the CPI report, but held support around the December record high, or the old record high that was hit in December, of 21.46 to 21.50 area. It didn't quite get to that exact level, but if I zoom into the hourly chart, you can see that it found support around this area, which had been support and resistance in the past on this hourly time frame before pushing higher. So the momentum is clearly still bullish on gold, and the next level to watch is this level right here at 21.75, which was the base of the breakdown on Tuesday. So should we go above that level, then that could pave the way for gold to potentially rally to new record highs. Meanwhile, even if support breaks down below this area that I had just highlighted, there's significant further support seen around 2080 area, which was significant resistance in the past. So both the short-term and long-term technical indications point higher for gold, and there's going to be lots of levels to watch on the downside should we get a pullback in the coming days or weeks. So with commodity prices rising, it's no surprise to see commodity dollars outperform, and the Aussie dollar has bounced right where it needed to at 65.95 area, which was previously resistance. This level turned into support after it got a test from above on the back of that strong CPI report from the US yesterday before bouncing back. So the path of least resistance is clearly to the upside, especially after it broke above the 200-day moving average. And we can see similar pattern on the New Zealand dollar, which is also above the 200-day moving average, but it's yet to kind of cleanly break out above its resistance area around 62 or thereabouts. However, it looks like it is heading in that direction, and a potential breakout could pave the way for a run towards the highs that were last seen in December of 63.70-ish. The dollar CAD is also looking weak, favoring the Canadian dollar over the US dollar, testing the 200-day moving average. A clean break below this level could pave the way for a run towards the lows from last week at 134.20. Below that, we could be talking about the next level of support around 133.50 area, and so on. So the key point here is that the US dollar is looking bearish, especially given that it's not responding in the way you'd expect it to strong data. After yesterday's CPI report, the US dollar should be finding support, but it isn't, suggesting that the market is expecting the Fed to cut interest rates anyway in June, and potentially cut a few more times before the year is out. The euro dollar has also bounced back after pulling back only slightly on the back of that strong CPI report yesterday. We had some weaker European data today, but this hasn't prevented the euro from bouncing back. And so the technical path of least resistance anyway remains to the upside, and I think a move up to the 110 handle could be on the way shortly. And a quick look at the cable chart, the pound against the dollar. It has bounced right where it needed to. This morning we had some GDP data from the UK which came in line with expectations, and this helped to prevent it from going further lower than it already has. The key level of support at around 127.50 area, the shaded blue region, needs to hold to maintain this bullish trend. The trend is indeed bullish, given that it's above the 21-day exponential and the 200-day moving average, making higher highs and higher lows. On Friday, it broke out above the December high to hit its highest level since last summer. So clearly, the path of least resistance is to the upside, and I wouldn't be surprised if last week's high were to be tested again in the next couple of days or so at 128, just under 129 handle. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com.